Let's go to the daily time frame, grab some context. So we're currently trading up at the ceiling right now. A touch below it, frankly, on this candlestick. So we're not quite there. Almost. Still very much within the daily range, however. Which is not a bad thing. That could work to our favor. It's one hell of a range. So maybe once we get up to the top there, we could look for a fresh breaker structure, possibly. The previous high would be the breaker structure, and then we could look at a long-term short. But again, this would be open over Christmas. Good afternoon, ladies and gents. Good afternoon. Hope you guys are doing well out there. Good to see you, Scotty D and Jack, H&C, Matthew. Oh, made it just in the nick of time. It was a rough journey back down here today. So many crashes. Scary how many crashes there are on that M25. I'm telling you, terrible road. The bane of the two areas where I switch between. I need to get rid of that bloody house, to be honest. The thing is, it's such a good. It's just good being there, you know. It's so good. And literally 10 minutes straight into the heart of the city, and that's the reason why I hold on to it, I suppose. All other reasons there, it's just a pain in the rear end. Good afternoon to you guys. Good to see you. Got Coratim in the house as well. Hey there, Ryan as well. Good to see you, buddy. All right, guys. Well, I don't really know where to begin today. There's not a great deal to discuss over and above what we got through yesterday. I do appreciate this is the weekly public event where we open things up to the broader community. So good afternoon to you out there on YouTube as well. Good to see you. Yesterday we got a few positions out of the gate, but the general consensus is that the markets are so exhausted at the moment and awaiting the last final major economic events of the year. We've got the federal interest rate decision, the final one. And of course, we have the non-farm payroll, the US employment data. And those two are your pinnacle economic releases of December 2025 and the rest of the year, you know, before we get into January's data. So the markets are just poised at the moment, waiting for that to take place. There's nothing going on with the Trump administration at this time to cause any major degree of market volatility. So there is that as well to contend with. We just don't have a lot of stuff going on. But, you know, we are at the very end of the year now. Things do die down, and it's absolutely fine. You know, it's absolutely fine. It is what it is. So what we'll do, we'll go through, we'll have a little scan of the markets, see if there's anything that's cropped up that may be of interest to us, may be worth having a stab at. But we're certainly not going to be going through plugging loads of trades at the moment because it's not prudent to do so. This is the month, at least, you know, coming up to the period of the month where all trading activity ceases. And to be honest with you, most pro traders, you know, quote unquote pro traders, will take time out. It's holiday time. Go see friends, family. You know, this is time where they usually take their foot off the gas quite a bit. And the same goes for everyone. You know, it should be the way as well. I know I've come across many a retail trader over the years who has, you know, felt the need to be plugging trades right to the bitter end, but the only thing it does is loses you money. because you've got real thin markets, thin liquidity, increased chances of black swan events taking place. You get a lot of flip-floppy markets as well, like this GA, for example. We've had a nice little run here, actually. It's not been too bad, actually, today. Shout out to the GA. But ultimately, we started here, and we're currently here 2 days later. So we haven't actually achieved anything. And you'll see that a lot with these markets at the moment. A lot of this wishy-washy price action. I mean, this Euro CAD, by the way, if you haven't downloaded the market report yet this week, please do so. You're probably going to be a bit late off the bat for the Euro CAD long. But we dipped down into liquidity first thing of the week. Actually, sorry, I beg your pardon. That was on Friday. We did that. And we opened up. We got a really nice breaker structure point, which was situated in around here somewhere. And that's what we're kind of stuck in at the moment. We're ultimately just stuck in that at the moment, that Euro CAD. It's not really doing much of anything. Euro yen we had running on from yesterday. This is a pending order, so as we usually do on a Wednesday afternoon, if you guys out there want to possibly participate in some of these, you are free to do so, of course. It's a 0.2, they're all 0.25% trades, so don't go risking anymore. I mean, to be honest with you, you should be risking less right now than more, if anything, in our current market conditions. But 0.25 always being the UTCF standard in terms of risk position sizing. And yeah, Euro Yen's not really done much of anything yet. We did have a couple of positions down here. The USD CAD, which was a stop out, doesn't register as a stop out on my trading view, nor should it, I doubt, on many of your guys' trading views, but it did stop me out. Not everyone will be stopped out of that one from yesterday. Some of you would have made it through, but I got taken out on the spread. I know Scotty D, we already discussed this morning. You got taken out on the spread on that one as well. It's a shame because as it happens, the trade went straight to target profit thereafter. So it is a shame, but it is what it is. Looking at this one now, the USD CAD may be of potential trading opportunity to us. Thinking about where we are at the moment, I mean, this is a really big low down here, and we've got this really nice area of liquidity above price. I was hoping that would have connected to this, but in actual fact, it doesn't really have too much of an impact, so I'll probably drag that one backwards here. So yeah, possibly thinking of a move back up to the highs again, maybe 139.60. We do have a little bit of a fake out area here, but the market didn't really react too much to it. This is definitely the floor that I'm happy with and now acting as the ceiling. So we could potentially look at the buyback in the USD CAD. We have just had a fake out on the most recent candle because this is our breaker structure for the trade. And we had that wick through there, didn't we? So had you been in this one, we probably would have been taken out by now, considering the risk-reward ratio that's available here. So there is that to contend with. I'm not saying that we're definitely going to do that one, but it's a possibility. I'll probably end up sending that out after the session if I decide to take it and give you guys the heads up. We also had a stab at the New Zealand versus Japanese yen. This was a break close retest trading opportunity. It didn't amount to anything in the end of it. We got the breakout. We got the kind of retest down here. It came up in a single bar and it wasn't really any good. But yeah, it was just a complete mess and it's not done anything yet. It's just ranged sideways. Very, very flip-floppy market at the moment. Doesn't really have much of a respect either to our technical levels, the supply and demand and stuff. It doesn't really meet that sweet spot, that entry, that sort of criteria that we're looking for there. So I probably wouldn't be phased about that one either. The one that I am excited about, cable, and not excited at the same time because it is our biggest mover today. Scotty D called it. So credit where credit's due, Scotty D. Round of applause to you, sir. Absolutely monumental trade, this one. And yes, I'm happy with my 1 to 2.26. I'm not saying I'm not. But boy, should we have held on to that one. We're trading at 133.06 at the moment. Excuse me. That's the best bloody move that we've got in the markets right now in the FX space. And yeah, we got a little bit of it. We got a little bit of it down here. and it's just absolutely surged. We obviously broke through the prominent high. This is the major point of inflection. Really nice big move back down into liquidity down here. Commercial interest took place, double bottomed. Really nice big move, and it just did not stop going. It's had a little intraday retest of this area, but I would expect a bigger retest. This is a sizable area. If we look at the daily time frame as well, okay, you can see this with clarity. Really nice big bar today. You can see that this is quite the daily level. If we go back in time here and just end up increasing the width as well, this is actually quite a significant daily point overall. We've had the beginning of a major inflection point, which took place in here. That saw the move back up to this high. Then the big trend continuation opportunity. Now we've got a counter trend break, don't we? Because this is the last line of defense. If we break close in a... we should retest it, really, on the daily, but obviously that's going to take a while on a daily chart. But ultimately, if we get a break close and a retest at this point, that's the end of the bearish run that we have. And we'll be on our way back up to previous highs at 137.60. So this could be of interest. I mean, this is of interest. We've already done well out of the modest trade. Now it would be nice to see the continuation available. So I probably will list cable as a light blue, but of course we're going to be halting all trading activity in a week. So, you know, when are we going to do this? It possibly will be the last. It could very well be the last FX trade of 2025. We'll wait and see. We got we've already covered the EJ. It's not really doing much at the moment. All the pound pairs are having a field day today. Very nice move in the GC as well. Although this one would have been difficult to navigate, not like cable. What else we got going on up here? We got the Aussie NZD, which has got a break close and a retest. This one triggered this afternoon about 1:45. Not really doing anything right now. It's break even trade. And what about the AC? Let's get rid of that. Let's go to the daily time frame, grab some context. So we're currently trading up at the ceiling right now. Touch below it, frankly, on this candlestick. So we're not quite there. Almost. Still very much within the daily range, however, which is not a bad thing. That could work to our favor. It's one hell of a range. So maybe once we get up to the top there, we could look for a fresh breaker structure, possibly. The previous high would be the breaker structure, and then we could look at a long-term short. But again, this would be open over Christmas, which we can do. We just cannot do. Do you know, it was the Australian dollar 4 years ago that was affected by a black swan event. And yeah, there were people I know that lost tens of thousands of pounds. Tens of thousands of pounds. And not because they had tens of thousands in their broker accounts, but because the broker, they then owed the broker. It took their entire account value, and then because of slippage, they owed the broker tens of thousands of pounds. So, yeah, it's you know, I'm not kidding. It's really bad. It's really, really serious stuff. We go back in time. Let me show you the GA one. It gives you the cleanest view. January 2019, 5 years ago, sorry. 3rd of Jan 2019. Look at the size of that move. That took place in less than a minute. That move there. Absolutely phenomenal move. Look at it. A 12.7% move. 2,200 pips. Almost 2,300. This one here as well. Another black swan event. They happen, and they happen periodically between December and January. December and mid-Jan. So it's the time where you really want to hunker down, get rid of your market exposure, and leave yourself clear. Clear is safe, and safe is good. So that's about that. Let's have a look at our metal markets, see if there's anything going on here. I've been really poised this week on gold. I had a gold short in mind. Was gonna launch it yesterday for for our UTC traders, for the public guys out there, of course. But we didn't end up launching it, and just not really seeing the follow through, the conviction from this trading asset that we want to. That's the thing, and it's a good thing that we didn't. Because frankly, we've broken structure once, we've broken structure twice, we've broken structure a third time, and it's still not happening. It's still not going anywhere. So this is exactly what I'm talking about here at the moment. So good job that we did stay clear of gold so far. It needs a little bit more of a fundamental reason to move. Right now, we're based on, purely technicals. And this is what happens when the markets run purely off technicals. It flip-flops a lot. Let's get a look at silver. So we had the silver break of structure. Yeah, we did have a silver break of structure. Yes. The first one here was a knockout, but if you didn't punch your numbers in by pure chance, you would have made it in that trade. And we did actually get a couple of decent opportunities thereafter. We got the sell-off, and then we got the buyback. And those two margins seem to have been working out quite well. I would actually be of the frame of mind of taking another short in this one, actually. It could be one of the few trading opportunities that we actually look at today. Maybe a break of structure just below there, I would say. And then look for a target profit back down at the lows at 57.86 based on a pending order. Let's see what the risk reward ratio levels out to be. Because in an ideal world, I wouldn't want the stop loss too tight on this one. 1 to 2.3, which would then beat not many of the highs, to be honest. It's not great. Yeah, it's still running a fair bit of risk on that one, but you could, I mean, look, it's a valid trade idea. It follows the parameters, it follows the rules. Your entry criteria is there. You're trading away from a larger point of liquidity down to a median. Everything lines up about it, but you just got to be aware of how these markets are trading at the moment. Adapt to it a bit. But I will fire that one out there. I like that trade idea personally, so I'm going to have a stab at that one. So you guys can do with it what you will. Let me post that one out in there. Come on. There we go. There you go. Right. Let's move on then. Natural gas at the moment, it's having a 3.4% day so far. We've now officially broken through the original target profit that I had at 483. And we're currently trading at 484, just a touch above. So it was a good call, I think, in terms of holding on to this one. I know this has been a publicly talked about trade anyway because it's from a market report, and with all of my thoughts of the market report initially, and then it's been updated in the general chat, not in the traders lounge. But yeah, it's looking real good. For those of you who probably obviously weren't there yesterday, this is just a long-term hold. We are still holding on to this throughout the liquidity point. The new target is now 5.0. We've raised the CSL, which is the locked-in stop, at 4.492, and yeah, we're just letting it run. What we're going for here really is a squeeze. We've already got the majority of the trade locked in, and now we're just looking for that final squeeze back up to the 5.0. This is then going to lock in a 1 to 23, so a 23x return, and yeah, I'll be a happy man when that one comes to an end. I'll be happy to close it down, certainly, but yeah, it's been one hell of a ride, hasn't it? One hell of a ride so far, that one. So yeah, not bad, not bad. UK Brents. I was really hoping there was going to be something on this one, but no, there is unfortunately not. We were looking at this one as a possibility. I was going to send this one out yesterday. Didn't fancy it, and for good reason. We would have been at a loss as a result. So it's gone nowhere so far. We have had this little run to today. It started around at 2 o'clock in the morning. GMT, where by the time we got out of bed into our desk, we were already halfway through the move. So actually, it's not moved anywhere today in terms of our actual trading hours. So let's have a flash over to crude. Should look just the same. Pretty much. 6 a.m., 7 a.m. we're trading at 58.89. So stone's throw away from where we're trading at the moment on that one. We are back up at the liquidity high. I don't really see too much of a reason for bullish momentum to continue with crude at the moment. I think it's more bearish than bullish for sure, which means that you could potentially look at the sell-off between these two margins here. We've had a pretty good run through. I mean, you think about it, this has not been too bad. The success rate is quite high. Apart from this one area here, this period of candlesticks trading above the liquidity, we have been sticking to the trading margins very well. So honestly, if you can get an aggressive enough entry and have your stop loss above or below one of these points, I think you're probably looking pretty good about it. Let's have a look at that one there, for example. Just for an example, if we took the trade here, stop loss down at the lows, that means that you could run a profitable trade. With a strong risk reward ratio, 1 to 2.2, with it just above the major high up there. Yeah, okay, you're not going to be able to incorporate that one, but the majority of them you will have inside your stop loss, which is good. But in order for this one to play out, you will, of course, need to see the push back up into liquidity and then another rejection of it. But I'm hoping you guys can see this. There is something else that would come as a result of this that would only add confluence to this potential trade idea. And if we got a move back up into liquidity and then down, it would mean that we had an M reversal as well on top of that, which would only add confluence to our potential short. So again, not too bad. I will list that as an official position. I like that one myself. And yeah, I prefer that chart than Brent's, funny enough. Let's download that one. Okay, US crude, there you go. Right, let's get into our US indices then, team. Let's not waste any time. The US indices this week have been a sorry state of affairs. That's how I would label it. Not been easy pickings. Yesterday was not fun. And yeah, it's just not been very successful so far this week. I mean, look at this. This is what we've had to deal with. The US 30 Dow Jones yesterday was just a complete washout. Had a couple of bars up, a couple of bars down, triggered both trades. Really bloody annoying. It just wasn't great. And we've ranged real heavily since then as well. I mean, this is all-time low trading volume. The S&P 500's got 16.7 mil in it so far in active trades. US 30 Dow Jones 46. The NAS 100 usually has close to $1 billion. It's got 271 million. So we're talking very, very low numbers in these markets at the moment, which is really surprising. I mean, we don't usually see this stuff in the beginning of December. This is usually what happens mid-December, which is when I cut off my trading. So it's very strange to see this at the beginning of December, and I can only assume at this stage that it's because all of the professional liquidity is awaiting the final two major events of the year. NFP, of course, and the Fed event. And that's the only thing that makes sense at this stage. So, I mean, look, the margins haven't really changed. Again, I sound like a broken record because I said the exact same thing yesterday. But it's true. It is true that the margins don't change. They are the same. We haven't made any new major highs. We haven't made any new major lows. The markets continue trading sideways. I think for the NAS 100, I wouldn't have such an exaggerated margin to trade it in. I think I would be looking for more of the modest in and out day trading style opportunities. So, for example, I would find a relatively strong point like this, for example, makes sense. That one there. Go down to my 1 minute chart, and then I'd look for a nice little floor here on the 1 minute time frame, possibly where the price line is right now, about there. And then I would take that as the trade. And this would be my US Open NAS 100 short this afternoon. So you're kind of just thinning out the noise. You're really under the microscope, looking at the defined details, breaking things down, and then trading those sort of more intricate moves. But I mean, you still look, that's a 1 to 2.84. That's a really nice trade. So work out things like that. You've also got the other one down here as well, which is maybe worth mentioning. I prefer the more aggressive one because it means that we get a higher stop loss, but there is that one in there as well, where you could take this opportunity down here with your stop loss at about there for a 1 to 2.72. Again, really nice risk reward ratio. You're just thinning that process down again. So that's not too bad. You've also got the opportunity for a long as well if the market comes down and then rejects the floor. So you can take the trade on the way back up as well. And that makes a lot of sense. Certainly with our trading conditions today. Back up there. And that's going to give you around about a 1 to 2.6. Okay, so that's that. Dow Jones, am I even feeling this today? Probably not. Probably not. Certainly not looking for going in for anything as large as I have been. I'll tell you what we can do. I'm going to take all of those back. There we go. So if I'm looking at this bit of price action today, let's have a look at the 15-minute time frame. Oh boy. Party time, eh? Party time in the US 30 Dow. We've got like these two areas. It just doesn't amount to anything. I mean, look, there's trading margins available in here. You've got this area, don't we? Right? That makes perfect sense. Well, maybe just a touch higher. So about there. So that's a long breaker structure point right there. So then we can load up for the long target. Stop loss down at the lows, maybe 1 to 2.5. That's not too bad. I actually do quite like that trade. I'm not entirely sure of its efficacy though. It might be a bit of a dud. The market may just blow straight through the floor this afternoon, so we'll have to wait and see for that. But that's not too bad. That's not too bad. Throw S&P 500 into the mix today. This one didn't actually have too much of a bad move yesterday afternoon, about 4 p.m. Got this really big sizable move to the upside and then the downside. I think if we can probably split these margins down the middle. So for example, we've got the big high, the big low, and then right here, we've got this area, don't we? So we may be able, I think trading on top of it might be slightly too risky, too much of a crude trade. But if we go down below, then we can look at maybe a 1 to 2.8, I would say down there. And that looks really nice because we're clearing out a lot of the dead money up there at the moment. And we're just leaving ourselves with what I would suggest is the prime real estate, which is where the price should reach and then really nicely drop through in practice. So we'll have to wait and see what the end result is and what we're dealing with at the moment. But that could be okay. That could be all right. So yeah, that's about it really. Yeah, that's about it, team. That really is. Gold's having a push now, isn't it? Big move. What's the DXY up to? Ah, it's continuing the drop. We did say this would happen yesterday, didn't we? We were talking about the nice big margin down to 98.80. Clean drop, M reversal inbound as well on the daily time frame. So yeah, no wonder gold's having the push, but we can't trade this one for ages long. I mean, we won't be taking a long in gold this week because it needs to bust its way through 42.80. Once it busts its way through there, then we can take the trade up to 43.60. So that'll be a good play for the pipeline, maybe next week. Be our last gold trade of the year as well. Last week's going to be the last trade of the year for a lot of these assets. But yeah, that's about it, team. I don't think there's not much. Yeah, there's no point, staying on for the sake of it or wasting anybody's time. It is what it is. We're here to provide you with market insights, and at the moment, this time of year, that's that is the insight. That is the insight. So, has anyone got any questions or anything? Anything you want me to look at before heading on? Trying to make a living out of these US stocks this afternoon. That's going to be my main job. BTC, yeah, sure I can. Yeah, of course I can. Let's have a look. Crypto space has been on utter sell-off recently. But I think we had a bit of a bounce, didn't we? Yeah. Okay, BTC 92.80. Let's check out the daily. Yeah, it's a pretty big one. It was a pretty big sell-off. Broken quite a few points of quite a few structural points. It's having a nice price action pullback at the moment. Actually coming up to a previously used one. I mean, the path of least resistance on this is down from a technical point of view. Fundamentally, there is a lot of reason for cryptocurrencies to be sold off at the moment. But I also want to say that at the same time, the cryptocurrency market cap has dropped by billions. So I think this sell-off could soon be already at an end. There was good reason for it to be sold off, and it has been sold off. So once we reach some major floor where we know there's going to be commercial interest, I would say arguably down here. I don't think this is anything. I don't think this is anything more than a nice retest. I mean, what's that? It's not come from anywhere. So I would probably say that it's got a little bit further to go, maybe down to 76.65, and then we'll start getting up from there. With just in terms of BTC, I know some of the others have taken an even worse hit. XRP was a bit of a deadly one, wasn't it? It's down at 215 now, so that's a pretty sizable sell-off. Still trading on top of the big point though, back in time. Some of these others. Solana. Yeah, I mean, at the end of the day, they're all so tagged to BTC. It's all exactly the same stuff, really. Sometimes you get the outliers, but yeah, they're just they're tagged so closely to BTC. It's you just look at BTC, I suppose, don't you? But yeah, I think that's what I would say about that. Look, at the moment, we're trading up against liquidity. You can see, rejections, knee-jerk reactions taking place. There's a lot of commercial selling going on at this area at the moment. We've got a clean margin between 91.95 down to 96. I think it drops to 96. And I think in 96, we'll probably start seeing a lot more interest back in 2026 again. And things will start turning around. But don't put your money on that. Do your own research. Do your due diligence, of course. But that's what I would expect to happen. FYI, I own all of these. I actually built this portfolio in this trading community, but possibly a while back before some of you were around. And I've lost thousands. I've lost thousands in it. Actually, no. Tell a lie. I haven't lost thousands. I'm still up overall. But if you think about from where we were, it's many thousands that have been lost from the highs. So yeah, it's not pretty, but it's fine. It is what it is, and I imagine it will come back. I made a hell of a lot of money in it this quite quickly though. Quite soon after, XRP was ridiculous, absolutely ridiculous. This one. I mean, we started buying into XRP in this area in here. as soon as we were breaking through the highs. I've still got the damn thing in there. Look, this is where I was considering, and then I was buying on the breaks of structure in these areas, and then I bought in again at this area, and then it rose from there all the way up to here. So you can imagine how much it was worth. H bar, yeah, another really interesting one that's going to have government applications. This one was pretty good. This one got a rally on fake news, which was quite interesting. But this is just how much cowboy markets these things are, though, isn't it? You know, they really are complete cowboy markets. There was a complete fake news story, and the damn thing rallied immensely, absolutely went wild. But yeah, it quickly lost everything, and is now subsequently sort of cruising at around 1435. It will go back up. H bar will eventually continue climbing back up to 25 and 30, even possibly those previous highs at 38 and 40. It is just a matter of time, I believe. Some of these, I would say many of these, will just die though. Like for example, Jito. I was very, very hopeful, because that's what you are when you buy something called Jito. You're hopeful. And this one's going to be delisted super soon, no doubt. You've also got Kangamoon. Do you know what? I bought in on this, thinking it was going to be, it was going to be crazy. And yeah, it was crazy. It was so crazy it went straight to the ground floor. So that's how crazy that was. Yeah, awesome. Had a great time with that. So yeah, that's about it. Listen, guys, I'm pretty much procrastinating now. But yeah, that's about it. That's all I've got. That's all I've got at this stage. So I'm probably going to wrap things up there. Then we've got about 20 minutes to go for the US Open this afternoon, so we can get out there and get ourselves ready and raring to go for it. Let's just have a quick look. Scotty D saying the stocks have dropped. My God, man. Interesting. NAS 100's cleared the entirety of the available margin on the 15-minute time frame in the space of like 3 minutes. Scotty D, what's going on? Tell us, mate. No, that's old. That's not reactive. Microsoft lowers AI software sales quotas, but they always revise their numbers. I can't imagine that's making the market dip like this. This is crazy. I mean, look, this actually in real time is exactly why we want to be keeping ourselves as clear as possible for as long as possible, and why we should only be looking for those in and out trading opportunities, because this kind of thing happens, and it happens frequently at this time of year. And the reason being is because there is such a thin liquidity. Okay, these are very illiquid markets at the moment because so much money is on holiday. And when you get this kind of stuff happening, it doesn't take as many people to move the market as it usually would, which means if you only get a couple of big firms shorting or longing, you're going to get these really crazy moves, and you're going to be wiped out. You're going to be wiped out by stuff like this. It all looks really nice in hindsight when you look at it. Oh yeah, wish we could have been on that, or the margins here were perfect. We should have been trading the whole thing. But you can't. You haven't got a crystal ball. You're never going to be able to tell the future like that. And trust me, you lose money a lot more than you make money in random episodes like this. Take it with someone who knows. Absolutely. I mean, you probably know yourselves by now. Always play it safe. Right, guys, I am going to wrap things up there. We've got 19 minutes to go for our US Open this afternoon. I hope you've enjoyed the session today. More chilled, and it will be. They are going to be chilled from this point on, team. All the sessions, they're going to be real relaxed, laid back, chew the fat, and including a couple of US Open trading opportunities every single day. to be honest. I mean, the FX space really isn't putting out now. We've got complete flip-flop environment in the metal markets. Energy markets are doing okay. I mean, predominantly that natural gas is really what's keeping the interest in commodities right now. Oil markets aren't really doing a bloody thing. Yeah, well, he says that they weren't doing a thing until we had this random bit of news. I'd love to know what is actually going on truly behind the scenes. But anyway, we'll find that out in the next 5 to 10 minutes, I have no doubt. But yeah, so that's basically it. So have a great day, guys. Take care of yourselves out there. Trade safe in the US Open this afternoon. If you need me, I'm course of here for you. So just ping me a note or give me a heads up, and yeah, we'll get it sorted. So I'll see you then. Thanks, team. Catch you later. Bye bye.